Hello, everyone. This is Kevin Erickson and Nikki Erickson with Kevnik Mortgage. Big buzz in the mortgage industry, or actually in pretty much everywhere now, is increasing costs on things that is including gas prices, home prices, and interest rates. So when we start looking at from a historical standpoint, we want to talk a little bit about, from a historical standpoint, what interest rates are doing, just the normal flow of interest rates, and really take a look at it from a historical perspective.
So yeah, when we look at the graph we have in front of you, we have the blue line, which represents the 30-year fixed interest rate, and the green line, which represents the 15-year fixed interest rate over the course of time. So what we've done right now is we've narrowed the focus over to the last couple years, and you can kind of see where that mortgage interest rate has gone, from lower to higher, and we are seeing a huge increase in interest rates from where we were 2 years ago. However, if we want to put that into a little bit of perspective, we can start to move things back and take a look at the last, for example, maybe the last, 10 years, and really start to look at what that looks like from that perspective. Kevin, do you want to talk about the mortgage interest rate flow over the last 10 years?
Yeah, really, if you look at, we're in a normal pattern. It's probably the largest increase from over a short period of time that we've seen in the last 10 plus years. But really, interest rates at this point are in line with where they were 4 years ago. So people were buying homes, they were moving forward with things. Still, on a historical perspective, if we even push this graph out even further, you're going to start to see that, the interest rates are still at a historically low point, maybe not as low as they were a year and a half or in the last year. But when you start looking at it overall, money is still inexpensive.
Mm-hmm. And you can see that with this graph, even through the gray lines represent the times that we were in a recession, and you can see that the normal flow of interest rates on that up and down motion has trended lower since that time, but is definitely doing that, that up and down kind of motion that you'd come to expect from the interest rates over time as a whole. And if we really want to get creative and really want to look at mortgage interest rates, all the way back to, the beginning of when they really started to record the time in the 70s, you can kind of see that in the 80s, we all know what happened here with our parents talking about, or, our grandparents or whatever it is, talking about how they were paying these 18 and 19% interest rates back in the 80s. And so you can really see that there is a general downward trend. However, people are still buying houses. People are still using different strategies to find ways to afford the house that they want to be in. And that's what we're really here to help do.
Yeah, what's the future hold for interest rates? The projections from everybody is that they're going to continue to rise. What that means is nobody's got a crystal ball, but at the end of the day, we know where we're at today. We're here to help answer any questions, help you kind of strategize as far as your mortgage goes, and really help you, make the best decision you can for you and your family today.
And if you do have any questions about interest rates and how that affects your buying power, or whether or not you have questions about the equity that you do have in your home, this is what we're here to do. This is how we're here to help you answer those questions and help really help you get that interest rate right sized for where your mortgage is.
Thank you.
Thanks, guys.